All right, so Rich, a number of months ago, we did a video on the Giuliani bankruptcy. From what I understand, there's been a lot of changes that have popped up since. You want to walk us through kind of where we were when we did that first video? I think it was over the summer. It was a number of months ago. But where did we leave off, at least with our audience?
Yes, we did the video over the summer. A lot of people are saying it might be a top 5 weekly Friedman, so really good, really popular one.
But it might be.
You know, I tend to think it's number one. Everyone who works for me says the same, so I'm sure it is. But where we left off, Giuliani was seeking dismissal of his case.
Okay.
Right. There were some issues with certain fees that were owed.
Well, remind me, though, why would Giuliani or why would any debtor seek dismissal of their own case?
They started discovering some things that he was hiding. Right, so if we recall back to that video, we discussed a lot of stall tactics. He was stalling. He wasn't disclosing all of his information. I think he finally reached the end of his rope there, and it was time to just get out before they started discovering certain things that he likely didn't want discovered at the time.
So in essence, he wanted the case dismissed because he didn't want information to come out. Didn't he realize this would happen? Like, didn't he? It's bankruptcy. Everything's coming out. He didn't realize everything would come out in the bankruptcy?
Well, as is usually the case with bankruptcy, a lot of debtors use it to simply stall. We see it a lot with what we do. You know, people file bankruptcy just to delay. They don't really intend to participate in the bankruptcy. Okay. And he got a pretty decent amount of time delayed by doing this.
Okay, so you believe, or it appears as if, from the very beginning, the idea was file, stall, and then seek dismissal.
Oh, yeah, I think that was definitely his roadmap for this case.
Okay, so he seeks dismissal. Why is this a big deal, right? It should go away.
Well, you can just dismiss the case. He does have a right to do that, and we discussed that in the last video. However, there were a lot of loose ends to tie up, basically who was going to pay certain fees. Now, remember, there was a creditor committee that had retained this company called Global Data Risk, and they were special forensic financial advisors. And they were brought in to basically review all of his transactions, review his financial history, review and investigate his sources of income. And they racked up a lot of fees. They racked up close to $330,000 worth of fees.
It's a lot of fees.
And so who's going to pay that, right? So he was really opposing having really to pay any of those fees. And where we left off, they had worked out a partial resolution where he would put $100,000 in his attorney's escrow account to be paid to GDR at a later date when the court orders it. And he was to sell off certain properties to pay the balance. And there were liens put on a Florida property and a New York property. Who
normally pays these fees? Let's say it wasn't dismissed and they go all the way through.
Right, it would still be on the debtor, and there would still be a fee application that would be filed. So there was such an application filed in this case by GDR, and that's why even though it was dismissed, it remained open to hear their application.
Was this foreseeable? Like he knew in the beginning, I'm going to file bankruptcy, I'm going to get a stay, I'm going to eventually seek dismissal, right? Someone's going to be charged something to review my estate and to review my pleadings. He must have known this was a foreseeable result.
It's certainly foreseeable, and that actually comes up later. So what happened first was GDR filed their fee application, and he opposed it. His attorneys opposed it. And they said, well, we reviewed this application, and they have detailed timesheets, but a lot of the fees are duplicative. Multiple different people entering time for the same time entry, the same meeting. All right, that's duplicative, it's unreasonable. Okay? They filed a response. GDR filed a response. And they said, well, it's not duplicative because you can't have a meeting unless you have another person there. It's not a meeting, unless there are two people there. And there's value in that collaboration. And they weren't all internal meetings. Some meetings were with the creditors committee or creditors committee counsel or people who they went out to interview to investigate certain financial transactions. So they said all the fees were essentially reasonable. But Giuliani's main point of contention was that they were duplicative. So we looked at Section 333 of the Bankruptcy Code, which states, there's a non-exhaustive list of fees or things to consider when looking at whether fees are reasonable. And it's the nature and extent of the time spent, the complexity of the issue, and the reasonableness of the fees. That's what the court has to consider. And in their op, they basically said, well, it's unreasonable and everything is duplicative, and they wanted it reduced by about $150,000. And again, Section 333 states no compensation for unnecessary duplication. It actually says that. And it's very catchy. and it rhymes, and if there was a jury involved, that's probably what they would remember, and it might be a winning argument, but it's not. It certainly wasn't.
Does the fact that, or would a finding that Giuliani underwent this whole process to stall and eventually dismiss, would that weigh in favor of not cutting down the fees, or is that irrelevant?
Yeah, no, I think it weighs heavily. And the court even said that, and GDR said that in one of their replies. They said, look, you decided to file Chapter 11, and you caused a ton of delays. And the court at one point even said, hey, your obstructionist practices led to extra fees being incurred. And his lack of transparency as well.
Right.
You didn't disclose certain things. And, for example, I think we mentioned last time, they found out later in the case that he had a coffee company. Right? They didn't know that at the time. They didn't know that initially. So can you imagine you spend all these hours investigating everything, and then you realize he has this other company, and he owns this coffee company. Who funded it? Where's the money going? Is he making anything on this company? They have to now look into that, and that incurs all these additional fees. I actually looked into this coffee company. It's interesting, like Rudy Coffee, right? Like, what would you do with Rudy Coffee? So I bought a gift for you. Here, I want to try some Rudy cold brew.
It's cool.
Look at this.
It's a younger Rudy.
This is Rudy. So right now, Rudy is a bald guy, so he would be welcome on this podcast.
It's a younger Rudy.
This is a younger Rudy, and I thought maybe we'd try it today.
Let's give it a shot.
We're helping his creditors. We made a contribution to his coffee company.
Cheers.
You cheers coffee? Sure. See how it tastes.
It's not bad. It's coffee.
It's pretty good.
It's pretty good.
It tastes like coffee. Help us get through the afternoon, right?
This makes sense. I mean, I get the structure of what we're talking about here. Is this normal? Like, is this something where it's, I'm not going to say common, but like, is this Giuliani specific? Because obviously this is like a big, noteworthy individual. And you could see maybe the court wanting to, I don't want to put words in their mouth, make an example of him. Like, is this something that happens commonly, or is this?
Look, the procedure itself is quite normal. You have a Chapter 11 filing. There's a creditors committee. They appoint special counsel. They appoint a financial forensic advisors to come investigate. That's all normal, and fees are incurred. That's all normal. What's not normal, well, two things. One is just the public nature of this case, because he's such a public figure, and the amount that's owed. He owes several $1 million to these creditors, and he just delay after delay after delay. That's not typical. It does happen, but that itself is not normal. In fact, the court in this case overwhelmingly decided in GDR's favor. They approved the fee application. They approved $300,000 of their fees. So again, that $100,000 that was in Giuliani's attorney's escrow account, that's to be released to GDR, and the balance is going to be paid from the sale of his New York City apartment and a condo that he has in Florida. And then the court retains jurisdiction to hear anything that might arise out of this order. But the case is pretty much wrapped up at this point.
This seriously backfired on Giuliani, right?
It did. I don't think he planned to have a successful bankruptcy and get out of this with a discharge and not have to pay his creditors. I think he just wanted to delay and delay and delay. Now it's back in state court. He'll continue to delay as much as he can.
this is,
I would imagine.
This is a speculative question, but removing a lot of their details of this bankruptcy, his own attorney's fees, things like that, right? If you just look at the GDR costs, he lost $300,000.
He did.
But he had to have anticipated that there'd be some degree of costs. He didn't think the other side would incur zero costs, right?
No, he knew there would be costs incurred.
Do you think there's a chance, like he said, look, I might lose $300,000 in this, but I'm paying $300,000 plus my attorney's fees for the delay?
He owes so much money that $300,000 probably doesn't mean much to him. If by the time you owe as much as he owes, it's not, to add $300,000 to that is not crazy. He doesn't have enough to pay this back, I think. It would seem, unless he's hiding more assets or properties. But pretty soon he'll reach the end of the road, and he's going to have to essentially give up whatever he has. I think recently I read in the paper earlier this week that he gave up a Mercedes, 1980 Mercedes. I think it was Mercedes. He gave those to the Freeman plaintiffs. Those are those election that case in Atlanta where he had defamed them for interfering in the election. That's what he said. So he gave up a car. He's given up watches. So he's starting to lose some things now. He's going to lose these properties. So it's really didn't work out for him, I would say.
Regarding Giuliani and bankruptcy, will this conclude our videos? Like, is there anything further that could happen? I know they're retaining jurisdiction. Is there anything else that could pop up, or are we pretty much done here?
I think we're pretty much done.
Okay.
This has been an interesting case, and I think it's pretty much at the end now.
All right, Rich, this was great, man. You clearly know a lot about Giuliani, his coffee company, and the bankruptcy. So this was really good.
Delicious coffee. Thanks for joining us, everyone. Adam was great. I look forward to doing the next one.
Both guys of bankruptcy. Both guys of bankruptcy.